Hey, this is Justin with DayTradeTheMarkets.com on Monday, March 11th, 2013. Now, as you can see here, I've got just a blank chart, just price action. And what I wanted to do today, look at a few different charts here and just build a chart basically piece by piece from scratch to explain and show what all of the various pieces of evidence that we look at are telling you and how you can then utilize that information to increase your edge. And I think that's an important point when I say increase your edge. This is not this is a tool. It's not some magic indicator. It's not some system. Despite a lot of people that'll tell you that stuff exists, it doesn't. What you really here's a good question. If you get what I'm saying right now in the next 30 seconds, you get it. You get the concept. What you're trying to do is increase your edge so that you can make better decisions. And if you can make better decisions, then results come from those better decisions. So what we're trying to do is, number one, use market-driven evidence to help us get into more trades. Number two, or profitable trades, I should say. Number two, use market-driven evidence to help us avoid a few more losing trades. And then number three, use that evidence to help us stay in winners a little bit longer, even if it's 10-15% longer on average. That makes a huge difference over the course of a month and a year. And number four, to help us bail out of losing trades a little bit earlier, so we can cut instead of taking our max loss, we can take a smaller loss. Doing all of this by looking at market-driven data that's giving you real-time information on the real-time auction that's happening second by second in the market. So again, what I want to do here is have a look at the idea of these various pieces of evidence, and I'll build a chart. I'll build a 1 minute chart, which is just kind of a standard, relatively quick day trading chart. I'll also look at then a 5 minute chart, which is more of an intermediate time frame, a little bit bigger picture day trading. You could even carry this over, to some smaller level swing trading. And you can look at this stuff on a 5-second micro chart. If you're a really quick scalper, you could look at this on a position trading chart. The logic is all the same. But again, the idea is we're using evidence to help us make better sense of the market so that we can therefore make better decisions. Nothing magic, nothing crazy. It's that simple, but that is what increases your edge. So we're looking in real time at a few different things: relative aggression, high velocity, some real-time support resistance, and then deceleration divergence areas. Also a real-time directional filter, kind of path of least resistance filter. And we also like to frame that with a little bit bigger picture bias and bigger picture levels. So with that said, let's go back to that 1 minute chart that was just price action at this point. Okay, and again, you notice that I started with the idea of bigger picture bias, bigger picture levels. What we like to do is every day in our member center, we have a pretty detailed report and video on some of the key levels in our bigger picture bias. And the idea here is that if you can be on the bigger picture path of least resistance, all the better. So heading into the day as in the ES, which is an index market, it comes as no surprise that we have an up bias. So our bigger picture bias is up. And then in terms of our key levels, there's not a lot to work with because we're in pretty rarefied air. We're coming up on 5-6 year highs, almost all-time highs. And so basically we wanted to look at the 46.75 area as potential resistance. And if the market could get above that as potential support, then also down here at the 40 level, and we opened above that and didn't even test there. So again, not a lot to work with bigger picture, but what that's telling us is that's giving us one piece of the puzzle, that all things equal, we'd rather be on the long side. So our bigger picture bias is long, and then we want to see what the real-time evidence is telling us as the day opens. Obviously, if things can line up and the shorter-term evidence, the real-time evidence is telling us that the market's more bullish, and that corresponds with our bigger picture up bias, all the better. Now, you're also going to find situations where for example, the bigger picture bias is up, but the short-term real-time market structure is more bearish. That's what we call a conflict situation, and you either just determine to stand aside and wait for things to line up, or if you're more of a short-term trader, you focus mainly on what the short-term evidence is telling you. If you're more of a bigger picture trader, swing type trader, then you're going to focus on more of what the bigger picture evidence is telling you, okay? So this is just giving you one piece of the puzzle, this bigger picture, that all things equal, we'd rather be on that side. So hopefully that makes sense. Now, the next piece of the puzzle that we talk about, kind of our first main building block of so we went over the big picture bias, big picture levels. That's what we have going into today. Now we want to next look at what we call relative aggression bars. And these are kind of our first building block, our first real piece of important information. And with these, what these relative aggression bars are telling us is that when one side, it's not based on price action, it's not based on any technical indicator, it's telling us what's happening under the surface. And this is, I can't think of a better analogy. If you can come up with one, let me know. But it's kind of like if you look at a duck on the water. Well, if that duck goes left or that duck goes right, that's price action. You can see that. That's what's happening. What we want to see is what's actually going on under the surface. We want to look at what those ducks, what they called feet, the duck's feet are doing. If they're flapping, then you can see ahead of time that it's going to move left or it's going to move right. And that's what we're trying to do. So we're trying to find out when one side, buyers or sellers, is more aggressive at a given moment, and then also to what degree. We really want to focus on these level 3 or extreme buying and selling aggression bars, and these level 2 or strong buying and selling aggression bars. And you can see they don't happen a whole lot, so when they do, we really want to pay attention to them. And what we ask ourselves, especially if a level 3 comes in, is do we have follow through? So if this is a buying level 3 bar, extreme buying aggression, do we have some follow through? If so, in other words, does the low hold and do we take out the high? That's a pretty good sign that some initiative buying has come into the market. This thing is likely to head higher. If, on the other hand, we auction high enough, this can also be capitulation if this gets rejected. So in other words, if there's no follow through and quickly this low is taken out, that's a pretty good sign that the market's out of gas, so to speak. We're out of fuel. Okay, so by looking at these aggression bars, it gives us a really good real-time roadmap to see what's really going on under the surface, so that again you can stay on the right side of the market more often than not. Again, it's increasing your edge. There's nothing magic about this. It's just increasing your edge. You still have to put it together. You still have to think, that sort of thing, but it's increasing your edge. So if we go back to our chart, you can see it's just price action. What I can do is I can show all of them, level 1, level 2, and level 3. I can show just level 2 and level 3 and just level 3, or just the level 3. What I'll do is click on just level 3 bars, because that's really, if you just follow nothing else but the level 3 bars, it's going to give you a really big edge in terms of what's going on in the market. So we'll click OK. Okay, now you can see that we only had 3 level 3 or extreme buying aggression bars today. That was all we had on the level 3. But again, if you just ask yourself when one of these forms, especially if it forms on the high of the day when it happens, does the low hold? In other words, do we have not a full bar with white space above it? Does the low hold? If so, this thing's likely heading higher. Here's another one. Does the low hold? Yes. Here's another one. Does the low hold? Yes. So in other words, just by looking at the level 3 bars, we can stay on the right side of the market. We have a lot of trades that we like to take off of level 3s, like what we call level 3 retracement, where you're looking to get into the market a tick or two from the low of that bar. If it was a selling bar, the high of that bar, that sort of thing. So just the level 3s alone is nice. Let me also add then the level 2s in there as well. Now you can see we've got a few level 2s that have come into the market. They're not, the same level of power, but they're still good information. We still want to ask ourselves, is there follow through or is there rejection? So in other words, and again, if you can put that in context of the bigger picture, which is up obviously, we have an attempted move lower by sellers. If this gets rejected in the context of a bigger picture up auction, that can be a pretty good entry as well. So again, attempted moves, attempted selling move, no follow through, rejection. Okay, this market is still in control of the buyers. Okay, here's some selling. We have a little bit of follow through. We couldn't take out this low, but it's telling us we've at least ended this pure wave of buying, and we're a little bit more two-sided until something else happens. That next thing that happened is a level 2 bar with follow through, a level 2 bar with follow through. Here's a level 3 bar with rejection. So again, buyers are still in control of this market. Now here's a level 2 bar that doesn't have follow through. It's got rejection. So now, instead of being one-sided buying, now we're in a two-sided market. It doesn't mean that sellers have taken over. It simply means that the pure buying dominance, the vertical move, is over. Now we're in more of what we call a choppier two-sided market. Okay, so that's really what that's telling us. It's helping us see, and I'm going to keep adding pieces so you can see how this all comes together. But that's the idea. Number one, focus on these level 3 bars. What are those telling us? Those are giving us our roadmap. These level 2 bars give us a little more information as well. And then there's level 1 bars, which you want to be careful of, but they can help you in trade management and that sort of things. I'm not going to get into that right now. Okay, the next thing we'd add are high velocity moves. I'm not going to do that right now because there were not any high velocity moves today, and that makes sense. Obviously, you can see this wasn't a very swift moving market. It kind of just grinded higher. So there were no high velocity moves, but those work in the same manner that these do. Do we have follow through? Do we have rejection? I'll show you a 5-minute chart in just a minute where we have some high velocity moves, and you'll see what I mean on that. Okay, now the next thing we would want to look at then is support resistance zones. Okay, so we've looked at relative aggression, we've looked at high velocity move, there weren't any today. We've looked at the bigger picture bias, we've looked at the bigger picture levels. You know what, let me put the filter on next just to show you what I mean, okay? Okay, so I've put the filter on, and you can see that it went to dark green here right around noon Eastern and just stayed dark green the rest of the day. And what the filter has a few options on it. You can see the settings are right in here. Very bullish is dark green, light green is bullish, gray is neutral, and then we've got light red and dark red for bearish and very bearish. And what I've got set here on this 1-minute chart is for it to start new every day. And so what that means, if I close this, is every day on this setting starts gray. So in other words, it's not looking at what happened prior to this, like the prior day. It's just looking at this as a fresh start, and that's the last bar of Friday. It's a fresh start, and you can see it's pretty choppy. We don't really have any aggression come into the market until this time here. Okay, so you can also set it so that it's a continuation from the prior day, in which case that wouldn't just start gray. But on the one, and that's what I do on the higher time frame charts, what I typically recommend. Now, when we use the 1-minute chart, typically we recommend starting with it just as everyday neutral. It's kind of looking at today in isolation. Really up to you. That's a complete personal preference. But you can see here again, you know, we've got pretty choppy market. We start to see some aggression that's confirmed in this area, and then in this area here we've got a strongly bullish filter. So again, what's the filter telling us? You don't want to just look at the filter and trade blindly off of the filter. It's telling you, it's giving you essentially a little bit of extra confirmation, another 1 or 2% confirmation. If you're already thinking of a long trade and the filter's green, great, it's giving you more confidence. If you're thinking of a long and the filter is red, well, that doesn't mean necessarily don't take it. It's simply telling us, okay, you really need to think twice about this. Are you sure your analysis is correct? Do you have other evidence that's really in favor of getting long, even though the filter is red? So again, it's either it's kind of a red flag type of an alert, think twice, or okay, that's extra confirmation, get on board. It's not something, it's just a piece of the puzzle. It's not something you'd want to look at blindly. Okay, the next thing we'll look at then is the support resistance zones. Those come in real time, right here I should say. Okay, and you can see we just had one support resistance zone today. Here's support. Now this is a yellow, what we call caution zone here. Normally that on the high would be red, telling us resistance, but because when this was formed there was so much aggression in the market, so much bullish domination, this has formed what's called a caution zone. So it's an area we still want to monitor for potential resistance, but we essentially expect this area to get pierced. Okay, so what is this telling us in general terms? A support zone, a resistance zone. It's telling us all things equal at this support zone, or here when it turned over to green, all things equal at these support zones, that's giving you a little bit of added confidence about a long trade. So if you're already thinking of a long trade and it happens to line up with one of these support zones, all the better. If you happen to be thinking of a short trade and it happens to line up with a support zone, you might want to think twice. Same thing here. If this was a normal resistance, if you're thinking about a short, all things equal, that's adding confidence to that short. If you're thinking about a long, all things equal, be careful there. Now, again, this is a caution zone, not a regular resistance zone there, but that's the general idea. It's giving you another few percentage points of confidence, of confirmation of what you're looking at, or of, hey, you better think twice, buddy. You know, that's sort of a thing, okay? Finally, let me add the decelerations on there and the divergences. Okay, and you can see I've added, there's some dots and triangles here. And what those are telling us essentially is that this is a very short-term indicator. Again, this is not something you'd want to just trade blindly, but it can give you that extra percent or two of confirmation. So again, here's a situation, just to explain it. For example, this bar here has a lower low than its prior low, okay? But within this bar, within the inside of that bar, so to speak, the underlying auction process, the level of selling aggression is actually decreasing or decelerating. In other words, if we had a bar with a lower low compared to its prior bar and the level of selling aggression were increasing, we would expect that market to continue lower. But if you have, it's basically a divergence between price and what's going on underlying the price. So you've got a situation where we have a lower low, but the level of selling aggression is decelerating. That's telling us that all things equal, this market's likely to turn around. Okay. Now again, these are not something you would want to just trade blindly, but when you have other evidence to work with, so for example, in this case, let's look at this one here, or let's look at this one here. You've got strongly bullish filter. You've got bigger picture biases up. You've got this key support, what we thought could be resistance is now turned around to become support. You've got a green support zone here. You've got a lot of things lining up in your favor. This can give you that extra 1% confirmation. You, again, don't want to just blindly take them. Same thing here. Filter, strongly bullish. Bigger picture, strongly bullish. We're above any potential key levels. We have a green zone. Here's that extra confirmation that you might want to use. Okay? So again, you're just looking at these as puzzle pieces, pieces of evidence that you can use. Again, it's nothing magic. It's not some hocus pocus system. It's not something that's black and white. You have to be able to use your brain. You have to. If you're watching this and you're still with me, you probably get this. And if you get this, then that's a really important clue. That's what this is all about. It's about increasing your edge. Will it always work when you have a situation where you have a green filter and a green bias and a deceleration at a support zone? Is that trade always going to work? No, it's not going to be 100 out of 100 times. It's going to be a pretty darn high percentage though. You're putting the odds in your favor. You're making better decisions based on true evidence. Okay? Hopefully that makes sense. Hopefully that's resonating with you. So again, as I mentioned, this is a 1-minute chart. You might like a 1-minute chart, you might like a 2-minute chart, you might like a 10-second chart, you might like a 10-minute chart. Just to give you a little bit of a difference, let me throw a 5-minute chart on from today. Well, actually, for going back a few days. Okay, again, this is a 5-minute chart, and I've squeezed it as tight as I can make it here for this screen size. It's going back to the start of March, about 2 weeks now. Okay, so let's start adding some pieces. We know our bigger picture bias is obviously up. Let's start adding some pieces. Let's add level 3 aggression bars just to get a clue on that. Okay, and again, you see these don't happen very often, so when they do, you want to pay attention. Here's one with some nice follow through. Its high it held for a little while, and then we busted out on another one a couple days later. Another one headed higher. Here's one that, its high held for a while, but we were a bit two-sided. There was other activity there, but then at the end of the day, we busted out, gapped higher, came back and tested it the next day. Here's one where we gapped up and we sold off right into that gap. I'll show you more when we put a support zone on there. And here at the end of the day, we don't know if this has got rejection or follow through. But here at the end of the day, we had that. So again, just looking at those level 3 bars, giving us a pretty good roadmap in terms of what's likely to happen, at least in the near term. The near term's all relative. 5-minute near term's a little bit longer than a 1-minute near term. 20-minute chart near term's a little bit longer than a 5-minute. So it's all relative. Let's throw on some level 2 bars and some high velocity moves now. Okay, so I've added these high velocity moves, and you can see there are a few of them here now. These boxes here. You can see high velocity move lower. Here's another high velocity move lower. You can see we would expect the high of these to hold if they're made by sellers. And you can see when this high was being tested, we had another one coming in. So that kind of is changing. It's giving us a little bit of a heads up. Things might be changing. We would expect this low to hold. This one comes in, we would expect its low to hold. This one comes in, we would expect its low to hold. This one comes in, we would expect its low to hold. Okay, so it's giving us a pretty good feel for when bulls or bears are coming into the market, and is there rejection, is there follow through? Same logic. Okay, let's just keep adding pieces. Let's go with the filter now. Okay, we'll just put that on true. You can see here, this is a little bit longer term, so I've got it extended. It's taking into account what's happened beyond just today. Okay. Okay, and you can see the filter's basically green to dark green the whole way. Again, that's not a huge surprise, but what that's telling us is, all things equal, we would rather be on the long side. If you have a long trade, it's giving you a little bit of extra confirmation. If you're thinking of a short, it's telling you, well, you better think twice. That's all. Okay, let's add the support resistance zones now. Okay, and you can see here again, all things equal in the red zones, think twice about getting long. And if you have other evidence, that's helping you thinking about getting short. Now here's a scenario where you've got pretty bullish evidence already. So you've got a green zone, green filter. That's giving you a little added confirmation about getting long near these green zones. Okay. Red zones, again, it could be a good target, could be if you're aggressive, but in this situation, you're probably going to want to avoid, initiating a new short, but it's telling you that's potentially an area of resistance. Okay, so that's the same idea there. Let's throw in the decelerations. Okay, and you can see again we've got a bunch of decelerations, and this is 2 weeks worth. So I mean this is a whole day from here to here. So there aren't that many necessarily in each given day. But again, it's just that added 1%. If you've already got evidence that you might think about getting long, it's just giving you extra evidence. Okay, if you're already long or you're aggressive, it's giving you a little bit of extra confirmation. You wouldn't want to just trade these blindly. Okay, but hopefully you're seeing what I'm talking. I wouldn't expect you to understand every little last detail of what we're looking at here. Obviously, you haven't gone through the training, you haven't done any of our support. We do a lot of support. We're big on support. But if you're getting the gist of this, if you get the concept that what you're really looking for is a way to help give yourself more of an edge, to help you make better decisions throughout the trading day, then you're getting the most important point. So this video is getting long. I'm going to end it now. But let us know if you have any questions about that. You can get us at info@daytradethemarkets.com. A lot of other ways you can give us a phone call. It's on the email. There's other videos you can check out by clicking the link below. But hopefully you found this educational and helpful. If so, let us know, and we'll talk to you soon. All right. Have a great day. Have a great night.